Hi, I'm Jane. Welcome to the Attract Capital webinar series. I'm here today with CEO and founder David Barnett.
Hi everybody.
Hello. Today our webinar title is M&A Outlook for 2026. So Dave, how do you see the current year and how it is ending?
Well, this year's been interesting, 2025. It started off a little slow. Everybody thought it was going to be gangbusters at the beginning of the year, but some of the trade friction that we had and some of the new regulations made it difficult. But everybody that I've checked in with lately on the lending side says they're quite busy. The Fed is going to reduce interest rates. So I think 2026 is really going to be a strong year for a lot of M&A activity in the middle market.
That's really good news. So what are the big themes that you think will influence M&A activity in 2026?
I think it's almost like coming home. There's a lot of manufacturing and logistics supply chain companies that are coming home. So instead of making everything in China, people are realizing that it makes sense to be manufacturing things in the United States. And so there's a lot of infrastructural services and there's a lot of component suppliers that feed into that theme. I think that the lowering of interest rates is going to have a very beneficial effect on the economy in general. I think the recently Big Beautiful Bill and some of the accelerated depreciation is going to result in larger investments in equipment and machinery. And I also think there's a huge amount of private equity that has been raised over the past several years, and certainly private credit. The private credit industry has boomed, so there's a lot of private credit out there waiting on the sidelines, looking for good deals to fund into.
Very interesting. Dave, can you talk a bit more on the private credit industry? Do you see them taking more share from banks in the years ahead?
I really do, Jane. I think banks are overregulated. They're not as nimble. They're not as responsive to customer needs as they used to be. They're very concerned about risk ratings and their risk controls, almost to the point where they're not taking enough risk in order to meet the needs of their local community and the businesses in their community. Private credit lenders are more expensive, but they're much more responsive. They're much more customer friendly. They want to give you a loan, whereas banks want to find reasons not to give you a loan. So I think the private credit industry is going to continue to take market share from the banking industry in the years ahead.
That sounds great. What kind of acquisition deals do you see gaining traction as we move in 2026?
It's sort of like the Michael J. Fox Back to the Future movie. I think when I started in this business in the late 80s, early 90s, there were a lot of manufacturing companies. There were a lot of component. I remember being in Toledo, and there was a company, Toledo Molding Die, and I was in Indiana. There was a die company in Indiana. I think those are the types of companies that are going to start flourishing. I think these old line companies, business services, industrial services, manufacturers are going to be thriving in the year ahead. I see a lot of activity with contractors. A lot of private equity, private credit funds don't really respect contractors, building contractors, but more and more they're seeing them as value plays that could transform into other businesses. And I think just the administration is very pro-business. The administration in the White House is, let's build it here, let's have foreign direct investment, rebuild the United States. And I think it sets a very positive tone for the whole market. And I certainly see the animal spirits picking up with a lot of these entrepreneurs that want to buy companies.
That sounds great. Thank you so much.
You're welcome.
Well, there you have it. Thank you for joining us on the Attract Capital webinar series. We'll see you next time.